I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg, how you doing?
Well, good morning, John. I'm doing well. We're hanging in there. Yeah, the word that comes to mind is whipsawed,
Oh,
being jerked from one extreme to the other.
no, something like that. What happens in your mind? You manage money for investors. What happens into your mind going to those volatile days?
Well, typically, yes, there are typical signs of future coming volatility. And we've kind of been expecting, to some degree, some volatility for some time, and we're just having everything line up in what we call a perfect storm. You got Europe situation, which is getting uglier, and they're trying to solve that debt crisis in those countries over there. And then you have the debt ceiling deal, and we've got debt issues. And then you've got a lot of factors here that are just the uncertainty and the potential for a double-dip recession, economy hitting some soft patches here and there, and just not rebounding like we wanted. And so you add those things up, and even though earnings seasons has been really good in general, just a lot of uncertainty. So the market doesn't like uncertainty. And so what goes through our minds is how can we, number one, protect or mitigate losses when volatility picks up. And then we need to be prepared to when things calm down and watch for opportunities to put money to work. Because that's when you really make money, is when you buy at the right opportunity.
Okay. Well, what do you have for us for the market week report?
The S&P finished off about 9% for the week. Really what saved the market on Friday was the jobs reports. The market was down the Dow was down 500 points on Thursday of last week. Friday, the market, before the market even opened, the jobs report came out. Let me get my numbers here. Thursday's level was such a panic. So the level of interest in the monthly job figures was so high that the moment they came out at 8:30 a.m. Eastern Time, the Bureau of Labor Statistics website crashed. That's how much interest was in the jobs report. Fortunately, it saved the day. 117,000 new jobs in July. June's figures were revised upward to 46,000. Private employers added 154,000 jobs. The federal government cut 14,000 jobs. States cut about 23,000. And so, that was kind of a breath of fresh air after, Friday morning after just a terrible week and of the markets. And like I said, the markets rallied as soon as the market opened, up 170 some points on the Dow on Friday. Then even reversed and went even 170 points lower, negative. And so that's what we call whipsawed in the markets. And the Dow closed down 90 points. On Friday, the S&P was flat. So really, that's kind of the week that we saw as far as the big economic news was on Friday. Going forward, it's all going to depend upon how the European situation goes. The banks are, possibly in trouble there. So the government in Europe has to get into a position of not tightening interest rates, but easing them and buying back these troubled assets that we have in the banks, these countries, and their debt. I think once they kind of get that resolved, that's going to help take some of the fear trade off the market. But then we're probably going to be looking at some point, our economy is a fear of a double dip. And if that's the case, then don't be surprised to see Fed Chairman Bernanke and company come out with another round of quantitative easing, which which will be possibly a short-term fix, but long-term it's going to continue to hurt the dollar, and interest rates eventually will have to go up. So that's kind of in summary. I'll be in the cool area of Montana this week, enjoying the mountains and hopefully much cooler weather.
There you go. There you go. Well, take some needed time off, and I'll talk to you next week. That's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net in New York.